Letting it rip.
All right, back in Texas, baby.
Who's bringing you your hot dog today?
It was bratwurst because in the Midwest, everything's a bratwurst.
I would argue that it's more bratwurst here because we have a giant German population.
Oh, there's a lot of Germans up there. Yeah, there's a ton.
Yeah, I heard
So,
Hitler's up there too, hiding in the lakes.
no, he's in South America.
Tim Kennedy had it wrong.
He's in South America by way of Norway and Denmark and whatever else. Yeah, that whatever else the History Channel told you.
Yeah. All right. So you mentioned before we hit record, you said some legislative stuff. I have an idea of what you're going to say, but I'm not going to speak on it because it's not my industry. So why don't
Give
you
me,
uh
you
why
give
don't
me
you
an
let it
idea.
rip?
Let's give me an idea, and then I'll bounce in. What do you think?
From what I saw, there's another credit reporting entity that is now accepted by Freddie and Fannie that could help raise scores for others. Don't know how that works, but that's just what I've read.
Okay, well, that's a good one. Yeah, I didn't even have that one written down. I forgot.
That's
So
all I
let's start
got.
with that one. So yeah, I just got off a call, and it was sort of the DC people giving updates that I went there, and so now I get to hear everything that they got going on. And another exciting thing coming is there is now efforts to start trying to change some things here in Texas. Texas has a lot of really funky rules around primary residence and cash outs and equity and different things. So there are some efforts going to really start happening. It could take years for change, but people are starting to target some things, which is really nice. One of the things that they had previously gotten done was uh, for any disabled veterans, you may or may not have to pay property taxes at all. And if you have certain exemption rating, then you at least get reduced taxes. But the lenders were not taking that into account. They made you have to qualify based on a full tax amount that you're never even going to have to pay. And
Right.
so they got that changed and that's updated now. So like this group was responsible for some small things and that they're really starting to do bigger and bigger things now. And so hopefully you'll have some efforts in Texas happen sometime soon too, but which will help a lot of homeowners. So credit, that was a big thing on the call today that they were updating us on. And yeah, so you have Vantage credit scoring, you have
Hmm.
FICO credit scoring. So FICO has run a monopoly on the credit business for a long time, basically. So even TransUnion, Equifax, Experian, the three credit bureaus, they are not a part of the government. They are a private entity. Fannie Mae and Freddie Mac are technically speaking private as well. And so we're introducing some competition here with this. There's a lot of things at play. There's more to even think about than just the credit models itself and how the information shows up on a credit report.
Hmm.
But I can get rid of this gum. They have a new model coming out, a new company that can provide credit reports that will be able to be accepted to then sell a loan to Fannie and Freddie on the secondary market. So there's a
Okay.
lot of things that have to happen. Lenders have to be able to change and update it and get it into their system. We have to see what secondary market's going to do. There's these things called LLPA, lender or loan level pricing adjustments. So the Vantage scoring model, the idea here is that it's going to help people who are right on the cusp actually have a higher score because they include different data that
Hmm.
really more closely affects what your actual credit is. So if you had a bump in the road in COVID, which is over 5 years from now, from today, you on a FICO report, it could be just still really dragging your credit down under 600, for example. Maybe you have medical collections or something that aren't supposed to be in your credit report, but still kind of holding it down. Some of these other changes that have come out lately. Well, these new ones, it's supposed to be more about like trending data. So you can actually use your electrical bill, your utility bills, water, other things, cell phone bill, other stuff that you are paying on time, so
Yeah.
showing that you are a good potential borrower, and then so that Vantage score might actually show a higher score. So more people might be able to qualify now and fit into the lending bucket that wouldn't under just the old or only FICO credit reporting system. That's the
Right.
idea. But there's a lot of stuff on the back end that has to happen for that to be able to happen. So because this might show a higher score, well, someone that buys loans on a secondary market might not want that loan because they want the old credit report that's more tough and that fits their investor model a little bit better. So those LLPAs, that's what you see in pricing adjustments. So, a base wholesale rate is 6.0%. Well, now all of a sudden it's a little bit higher and there's some cost to that rate. Those are the pricing adjustments. And sometimes it's based on the state, how much money you put down, what your credit score is, and a few other things. So now you might see, well, if you use the Vantage report, maybe there's a little bit extra cost for that 6.0 rate
Hmm.
because you're using that other score. But you're going to get a yes versus a no. So maybe you will pay a touch of a premium. And then as long as you do that, then maybe the secondary market would accept it. So those are the things that have to happen now. So they
Okay.
made a joke on the call. Our government runs on Twitter now. And so
No, no, no. Runs on True
X,
Social.
X, whatever.
Runs on True
But
Social.
Bill Pulte is the
Mhm.
FH Federal Housing Administration,
Uh-huh.
whatever, FHFA. He's the one that said starting immediately, Fannie and Freddie, that came out as a tweet. And we are like, okay, immediately in the government is a funny thing.
I was to say, does that hold any weight?
Yeah,
He
yes,
he said it immediately, but did it actually take
it
effect?
holds weight. It gets things moving so that we can try to figure this out, the path towards progress.
Right.
But there's a lot of shit that has to happen for it to start making sense for me
Uh,
to be able to say, hey, great news. I'm going to pull your Vantage score, and that's going to get you this rate and cost versus over here, this rate and cost. That conversation cannot happen today just because he said immediately.
got it. Okay.
Because there's so many entities just to do what we do. So to pull a credit report, I have to go to a company who then uh, third parties to FICO and then potentially now Vantage, and they have to be able to do it. Then all the lenders and all the automated underwriting systems and everything else are going to have to be able to read the new Vantage score. And so there's a lot of tech that has to be updated.
So let me ask you, kind of opposite of the tech. Let's talk from a consumer standpoint. Let's say I'm buying. Let's say I don't qualify, or it just doesn't make sense for me to buy under the current FICO kind of standard and process. Let's say the Vantage score a year from now brings me into the market, whether no matter what it costs me or whatever. Do you
You
think,
go from a no, at least to a maybe.
right, but like just your knee-jerk reaction, because you talk with buyers all the time, and we work with a lot of people who deal with buyers that maybe shouldn't be buying. Do you think this could be a net positive immediately, net negative, or is it a long-term play out of just promoting competition within the credit reporting?
That was discussed on the call, so I'm going to regurgitate, people
Yeah.
that are closer to it. We don't know. We
Yeah.
just don't know because we have to see how it plays out. Just because someone has a good idea and wants
Mhm.
to do the right thing or something, other people could come in and stomp it out and say, "Nah, it ain't gonna happen."
Right.
Because for a long time, the credit trigger bill that was another one I think I wanted to talk about. It passed the House, it passed the Senate, two different versions. So now they have to iron out the differences before it can go to the president's desk to become law. So
Mhm.
technically, it's passed both chambers of Congress. It should be on its way, but it's not. They have to do one more step, which they never talk about in that "I'm Just a Bill" song, is reconciliation.
Hmm.
But that's a huge piece of legislation that's going to happen. That revolves around credit bureaus as well. So there's a lot of change happening and trying to update things with credit bureaus. These are, I just said the word, bureaus.
Yeah.
Bureaus don't move fast. So now, as a broker, all it takes is one lender that we are signed up with to change and offer it for me to be able to offer it.
Mhm.
Whereas everywhere else is going to be waiting on the bureaus. It's going to be waiting on big banks, big business to change something that they've been doing for decades and decades. So it's not going to happen fast, but it pushes people to have to adapt and get more current, which is a good thing, probably mid to longer term.
Yeah.
Short term, it's just like everything else, tariffs, whatever else is going on. We don't know what it's going to do.
Yeah.
We have to
No,
wait and see.
I mean, I see the same social media posts as everybody else. It's like wake up one day and oh, it's positive movement. Maybe I'm thinking about buying a house, and I wake up the next day, or I wake up from my nap at lunch, and it's like, oh, I should have bought 7 years ago. This is a horrible time. The
Okay,
market's
but
falling, but it's
keep
still
that
up
in
and down.
mind. Keep that in mind. 7 years from today, in the
Hmm.
future, are you going to turn back and say, dang, I should have bought 7 years ago?
No, I mean, yeah, but probably. I mean, it depends on
Yes.
your.
So
It
that,
depends on your purpose of purchasing, right? Because I had this conversation with my parents this past week. They still owe on their house. They've refinanced several times. They've taken equity out. Um, they've lived there since 81. They still owe on it. I think they'll end up paying it off in the next 2 or 3 years. But when I talked to them, I was like, do you guys regret what you did? And they said, no, because the equity and the increase in value paid for our life. Me and my sister went to private school our entire lives. We didn't live a lavish lifestyle. We went to college. We have minimal debt. They use their house and their equity and their sort of wealth building, which is the home, in a different way instead of leveling up and making cash. And obviously, they could have done things like that. When you look back 20, 30, 50 years, they could have sold, they could have paid off, and me and my sister could have gone to public school. We could have lived a very different lifestyle, and they could have made 200 grand on their house in the 90s. But they didn't. They used it to stay there. We had a home. So there's two different avenues to the investment portion of a home that I think a lot of people forget because we've talked about that recency bias of money was cheap. People have 2% interest rates and they made 150 to 200 grand on their home in the last 5 years. That's
quick
so far from
interruption.
normal.
Quick interruption. I would argue 6 to 7% is still cheap money.
Yeah, it is. So I also the one thing I have a very surface level of mortgages and just real estate market in general. When I see, hey, the market's crashing, values are dropping, you know, prices are being reduced. I'm like, no, everybody's coming back down to reality in my mind from
Yeah. So
2022, 2021. It's like, there's no reason you should have made 200 grand on your home purchase or home sale. You overinflated prices.
well, builders are overinflating prices right now on purpose, and that's why they're giving you all these concessions, and so that they can set different high prices.
They can
So
keep their
there's a
values high.
lot of things at play that you got to pay attention to.
Yeah, and it's all to me, it's all smoke and mirror. It like again, it boils down to what your purchase means to you.
Yeah, but also in a transaction, in the market, whatever, there's a pie. It doesn't matter how you slice it, the pie is this big.
Hmm.
Okay, so and then maybe as the years go on with appreciation and inflation, the pie can get bigger, but there's only so many ways you can slice that pie.
Yeah.
And so just because you sold 200K one time, it was like money was like fake for a while. We were printing it so much, and that's why we have this high inflation problems we have now. So that pie can get bigger and smaller, but there's only so many ways you can slice it. So within a loan, within a purchase price, within seller concessions, just know that if they're giving you a huge piece over here of seller concessions, well, they're probably giving you a big charge over here somewhere else. So a
Hmm.
4.99 rate is not free. And my deal is probably better than the builders. And I'm just going to leave that at that. But you got to give people, so going back to credit and builders, competition. That's what we're here for. If you only go with one place, fine. We like it when people go with just us and hopefully they trust us. But we are shopping multiple lenders for you as a broker. So we're already shopping multiple places. Um, but just get second opinions. And if you're out there right now wanting to do something, ask me and I'll tell you exactly what I think and what I see. And I bet you we can come up with something that's going to really work for the long term. But if you're thinking right now to save $5 or whatever, then good luck. You're probably going to be looking back in 5 years like, how's my balance as high as it is? Well, because you got kind of bent over.
Yeah, I was watching a report just today on the home builder side where they're taking haircuts on the interest rate, but not dropping prices. So these home buyers, they're getting torn apart on home values 3, 4 years down the road because they've got a 4.5% interest rate, but their house is overvalued by about 100 grand, and they can't go anywhere because
Congratulations, you're
whoever
stuck.
buys it isn't going to buy it at 4.5. It's no
Nope.
longer a builder special. They're coming to someone like you or to a bank and they're getting six and a half. I don't even know what the ranges are, but
Don't make decisions based on just right now alone. That's an emotional decision. You have to try to break in some business decision to it. Resell ability. Like, are you going to buy that house just because it's got a really good interest rate, but it's on the busy street? You're going to have a hard time selling that in 5 years with the traffic noise or whatever versus the one street over.
mhm,
That you would think about that. So you have to also think about, is this actually a good deal or is this just a good deal for me right now? And if so, both of them are fine to say yes to, but just know the questions and answers.
absolutely.
Okay, so we talked about credit. The trigger leads is a big deal. People are getting harassed on those phone calls, and they're being, the word deceiving, deceptive nature. That's coming out a lot with this stuff and these talks, because people pretend to be somebody who they're not, trick borrowers, and then steal the loan away from the broker who might actually be giving them a better deal.
Hmm.
But they'll say, "Oh, he's only giving you a 6.75. Well, I can give you a 6.5. Come with me." But then they don't tell you about the points, just like a builder, and that actually costs you more. And maybe even your loan amount is different and higher. So it's going to take you longer to pay it back now. So
Yeah.
they do those kinds of tricks on the phone, and they're real, super duper salesy, and they're not too interested in their local community because they're not even in your local community. They're many states over or wherever they are trying to make a sale. So this trigger lead legislation, hopefully we should have an update in a week or two, but that should be a big deal. That will change the market as well. So the long-term markets are going to come, it's going to all come back down to servicing in the secondary market. Who's holding the loans, who's buying them, who's collecting payments, because there's money in that when you have giant bundles of servicing like Mr. Cooper did, who Rocket just bought.
Hmm.
So servicing is a huge piece of the pie and the puzzle here with a lot of the new legislation and a lot of the things that are happening. Everyone goes, wait a minute, what does the secondary think about that? Well, how does that affect my servicing? Because that's where a lot of these big businesses have gone, is to servicing. So that's credit and servicing. I'll get to the big, beautiful bill. I got one other piece of thing for a VA that's going to be going out, but why don't you talk a little bit about that article I sent you? Did you read that?
I did, and I'm going to start off with it's a small agency in North Carolina that only has 50 employees that pulled 1,000 homeowners, which are probably in hurricane destroyed areas in North Carolina, Tennessee, and Kentucky, with the floods that happened this past year. Um, I can't remember the specifics of it, but I know it was talking about deferred maintenance, rising costs of insurance, tightening marketplaces, things like that. Um, the easy way for me to kind of cop out is that, like, the boomer generation didn't touch their homes because insurance is a negligible cost. It was like, hey, send us $30 and we'll insure your home for the next 20 years. And they didn't change anything. Nobody cares about roofs. They hear from the roofer, oh, it's got a 30-year warranty. It's like, no, the shingle has a 30-year warranty if nothing touches it. We get hit by storms, weather's changing, and by changing, I mean it's moving from place to place. Tornado Alley's shifted a little this way. San Antonio and Austin has actually gotten more hail this year than we did in DFW, which is abnormal. So a lot of things play into this, and ultimately, like we've talked about, it comes down to personal budgeting. Your home, what do you have to pay? You have to pay your insurance, you have to pay your mortgage, you have to pay your taxes. And then behind that, you've got your other necessities. You've got to be able to feed yourself, right? And then it kind of trickles down from there. People are buying cars, 14%. People have student loans. People are buying things they don't need
You
rather
mentioned credit
than
cards.
credit cards, rather than,
And wait. Did you mention the credit card percentages that no one ever tries to
yeah, they're
negotiate?
like 28% or whatever. It's like, yeah,
But hey,
insurance
but
has gone up.
but
But
6.5% is expensive, and that's too much for me.
yeah, but I mean, it's insurance is getting the blame. The rising cost of insurance is getting the blame for the bad mistakes of people for the past 15 years. It's is it expensive? Absolutely. But if I were to come to you and be like, "Hey, on your worst day, just keep it simple. On your worst day, if your house burns down, I'm going to cut you a check for 350 grand." Right? Just to keep it simple. No questions asked. I'm going to cut you a check for 350 grand. But you have to pay me until that happens. What's a fair number? How do you like what number should it be 30 bucks a year? Should it be 4 grand a year? Should it be 5 grand a year? Should it be
Well,
120 bucks a year?
it was, $1,000 a year until that number no longer became fair.
Until cost of repairs went up.
Right.
Shingles got more expensive. You got class 4 hail resistant shingles now going up on everybody's
Well,
roof. You've got
until
architectural
all your neighbors and everyone in your community started taking advantage of the system, where the system doesn't want to help you anymore.
you've got siding that now is going to deteriorate quicker than brick. You've got foundation issues. You've got plumbing issues. You've got galvanized piping that needs to be replaced that nobody talked about for the last 60 years.
So yeah.
You've
So
got
this is
aluminum wiring. You've got higher risk. With time
this
comes change. With change comes different risk, comes different pricing, and people just refuse to acknowledge that.
and this isn't that much different than the credit stuff, right? It's been one way for a long time, but to get to the new way is not simple.
hmm It, it's
It's
it.
painful.
Yeah, I'll give an
And whether
example.
you like Trump or not, and tariffs and the big beautiful bill and all this crap, we have no idea how it's going to go. But things have to be kind of drastic to change something that's been entrenched for our lifetimes. So yeah, change is sometimes it's heavy, and we don't know if it works or not until after you try it.
And when it comes down to insurance, it's to me. I mean, I've been doing it for a while, so like it makes sense to me. But it's such a hard thing to get somebody to buy into and believe until they get burned. I'll use commercial insurance as an example. There's a developer I met a couple months ago. He posted on LinkedIn his disdain for a specific company that handled all his policies for his development firm, from construction to auto to work comp, everything. And in his complaint, he's describing that he's not actually working with a broker. He just went online and did it himself, and the service is bad. If he had just paid an extra 20%, 15%, or even just the nominal fee that us brokers charge, he wouldn't have even had this issue. People want the easy way out. They want to pay as little as possible until it burns them. And it's like, would you rather pay a little bit more to not get burned on the back end, or do you want to guarantee that you're going to get burned and you save the 20 bucks
That's
right now?
that's also again short-term vision versus long-term vision. Trying to save a nickel now, putting yourself in big risk. 50-50. Is it going to be black or red? Or what if it's green?
hmm Well, and with insurance changing, this is happening more so on the Gulf Coast, kind of Alabama area. There's a couple guys that I listened to, and they had a home builder come on, and they're beginning to build and retrofit homes that are hurricane resistant from the framing. So whether it be steel framing, I'm not sure the specifics of it, but they're getting rated that way, and it's helping with insurance costs. Some of these insurance carriers in that area are starting to reward you. Like you've got a more resistant home. Does it
It
cost a little bit
costs.
more on the front end? Probably,
Yes.
but it's going to save you and the insurance company on the back end a ton of
So
money.
I've been hearing a lot about the composite roofs and different things like that. Where
Coming
it's supposed
back
to
a little bit, yeah.
bounce hail right off there. Hail's no problem with these things, but it's a lot more expensive to install. But if you're going to be in that house for 10 or more years, you're getting your money back.
My parents have a $60,000 aluminum roof, hail resistant roof that's been on there for 20 years. it's a pain in the ass to get it replaced because it costs the insurance company so much, but they have had no issues. I grew up with leaks in the roof, and then right around like 12 or 14, they put that roof on. It became a popular thing to do, and you'll see huge neighborhoods in DFW that'll all have those same types of roofing. They look like shingles, but they're all metal. They don't have any issues with hail.
But
They
it's
just they just
really
don't.
we have a spending problem as Americans. We create stuff out of nothing. You know, that's why everyone's stressed and in debt all the time. And so if you just make a decision with a little bit of long-term thinking, you might have a really good time.
Yeah, and it comes down to budgeting. I'll use a personal experience. Alex and I, we've had some things we've had to pay for the house over the past 12 months, and a new roof, a new AC, new wiring for the AC. We added some vents. We got some trees removed and some shrubs removed to help with some drainage and just overall curb appeal. And we were talking about how, we spent a lot of money on the house, but this conversation was happening right after we were both contemplating whether or not I should buy a $20 shirt. And ultimately, I didn't buy it. And so I told her, I was like, look, the fact that we mull over the 10 to 15 to $100 purchases and ultimately decide that it's not worth the purchase is why we're able to spend money on these other things that are needed, repairs, replacing
Well,
aluminum wiring,
but
and
needed
not be bankrupt from it.
needed and unplanned.
Exactly. We've set ourselves up to be able to do those things where we don't have to sacrifice how we live our day-to-day life when
But
most
it is
people most
but
people are like, we can't do it. I have to get a second job just to pay to get the air condition serviced.
yeah,
Or
it's not an easy thing to make sacrifices.
it's not, but it's
But what are you
necessary.
sacrificing really though? Bunch of stuff
Nothing.
that doesn't matter anyway.
Exactly. Which leads me to another portion of the sacrifice conversation. It's interesting that the entrepreneurial um ecosystem online, that all these guys talk about sacrifice. Get up, you work out, you work 80 hours a week, and everybody is in love with this thought. But then when it comes to, hey, maybe you don't take on that $1,200 car payment for that new car you don't
Yeah.
need, people are like, no, 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 I need the car. It's
For
like,
what? Yeah. Yeah,
so
it's
yeah.
that that people aren't going to change. People are always going to be people, and they're going to do that. But at least make these bigger purchases and stuff. Think about it. Think about long term. Are you going to be there for 1 year, 2 years? What's your plan? Why do you
Mhm.
want to buy this house? Do you want to rent it later? Do you want to rent it now? Do you want to make some money off of it, or you just want to place some money in the house instead and diversify and not have all your money in the market in case it tanks or what? You got just think of something and then follow your strategy.
Yeah. Or
You
if you
can't
want to be
change your
oblivious,
strategy, huh?
if you want to be oblivious, you don't get to complain.
Yeah.
That's
Well,
my thought process on a lot of things.
that's a tough one. All right. Well, let's make this kind of short. So, any other thoughts or updates or anything? Because next time, hopefully, we won't talk about real estate at all.
That'd be exciting. Uh, Not really exciting. I'm trying to finagle my way into meeting a former football great, which I'll tell you offline once we end the
Nice.
recording who it is. I don't want to just blast that out there.
I met
But
the. He's not an athlete, but I met the interim police chief of Fort Worth today at lunch.
nice.
Good
There's
guy.
a new economic development manager, I think, for Fort Worth, because
City
Stern
manager.
stepped down, city manager. That's going to be talking this month. I think maybe I'm going to go to it. We'll
Yeah.
talk about it. So
Tell
I
him
think
to
you'd
put
be
in
interested in
some.
seeing it.
Say, hey, what if you put in roads before the houses?
That's not how that works.
Yeah.
It's never going
All
to
right.
work
Well,
that
next
way.
one of these next episodes coming up. If anybody even cares, we'll tease it here. A friend that does sports turf on a lot of major stadiums all throughout DFW. We're going to get a lot of headlines here with international soccer and World Cup and all that coming, and he's going to be a part of turning in some of these like football and baseball fields into soccer stadiums. And they even did a project at the Daytona 500 and turned it into a soccer game. So they do a lot of really interesting projects, and we're going to start trying to talk to more business owners and talk about other things other than just real estate, just to kind of mix it up. So maybe we get 9 viewers instead of 8 next time.
Yeah, that's the goal. But yeah, that'll be fun to talk something completely different. And pretty much we don't speak at all. So that'll be nice.
Yeah. All right.
All
Well,
right.
good one. And also, may have a better way to record soon too. So that could be fun.
All right. Sounds good.
All right. Talk to you next time.